Good morning, everyone. Good morning. Welcome to Trading with Sergio Wednesday edition. Good to be back. Um, what's going on? Pretty quiet week, really. Um, I'll go through the positions shortly. Added uh, some directional plays, but basically the same things I've been holding on for a couple of weeks now. Um, as the title indicates, markets very resilient. The indexes are. I'm not talking the rest of the stuff. A lot of macro stuff that I've been paying attention to over the last couple of weeks, which I would like to get into today a little bit, just maybe 10-15 minutes. And then I'll put up the link for whoever wants to join. You can join, and we can discuss whatever you guys want to discuss. So there has been a lot of confusion to start with, by the way, about these two different looks on the live stream. So what YouTube has done is I use StreamYard for live streaming, and it's a really awesome, just web-based application. But now YouTube has given the creators of content the choice, or live streamers the choice to stream both ways, because a lot of people watch it, I guess, on their cell phones. So there is a vertical and there is a horizontal version. A lot of people are saying, confusing each other, because I do agree with them, by the way. YouTube did not make that clear. So when you do go to my YouTube page, there are two live stream thumbnails or icons or links, for lack of a better word. So one of them will have, at the end of it, a small, like a cell phone kind of an icon, and the other one will not have that. The one that has it is obviously the vertical version that you're seeing. And if you want to switch to the horizontal, you have to click to the other link or other thumbnail. I wish YouTube had made that clearer, that people don't get confused, because I'm getting emails saying that now we can just see you, like, you look like you're on a cell phone. Well, I'm not. I'm doing it with the same software. I'm using the same camera. Nothing has changed, except that YouTube now is allowing creators to stream in two versions, a horizontal version, and in fact, I'm seeing myself on my PC now two times. One is like a tight shot, and the other one is a wide shot where you're seeing my backyard. So hopefully that was cleared. I do like it, actually, that it gives people the choice to watch the live stream two ways. There are other tools that StreamYard introduced, such as I can put the comments, scrolling comments on the screen, but I think that's too much. And you guys can see the comments anyway, if there is any. So yeah, what's going on? Last month, well, not last month, a couple of days ago on Trading with Sergio Monday edition, I talked about um, yen carry trade, possibly yen carry trade part 2. And I don't think it's going to be similar to what happened last August, but I want to talk a little bit more about that. So the 10 years ago, the Japanese 10-year, 20-year, 30-year bond rates were zero. In fact, some of them went negative. And fast forward to today, 10, 20, 30-year, the 20-year, well, 10 years is hitting almost 2%, 10 years about 3.5%, 20 years about 280, and 3 years about 30 years about 3.5. So you guys can see what's happening to interest rates. It is their bond market raising the rates. It's not the government doing so. That's because Japan is the poster child for printing and spending. Their debt to GDP, ours is about 130%. Theirs is about 230%. China is higher, actually. So the whole globe is actually doing the same thing as we're doing. In fact, Japan just announced a $130 billion stimulus package Japan has problems. There are structural problems, obviously. Um, the bond market is literally tanking. The value of the bonds is going down because their interest rates are shooting up. They're literally going parabolic now. That is the reason that I've been talking about our own situation with 38 trillion to be 39 trillion in under the 50-day national debt. If you run an economy on deficits, which they have been, the problem that Japan has, by the way, that we don't have yet, but Elon Musk has been talking about this topic for a while now. Japan's birth rates have been declining and massively. And so the demographics are changing in Japan. So a lot of people are retiring. New generation is not obviously, making babies, and the Japan's population is in decline. So when that happens, and you do have this problem, well, you know, you don't have people producing and paying taxes, basically. So combined with that, when you live in some sort of la-la land like we have been fiscally, right? No fiscal discipline, deficits as far as the eye can see, and regardless who's in charge at the White House or, as far as the government is concerned. So Japan has that problem. So now, in one hand, what Japan is going to do is they're going to, while the rates are going up, shooting up, literally, um, they're going to announce this $130 billion stimulus package. Well, that's inflationary, obviously. The reason the Japanese rates are shooting up is because inflation has come back. They were in a deflationary cycle for 15 years. And that's why they kept the rates as zero, ZERP, our ZERP, as we remember, since GFC, actually, until 2021, maybe. So what they're doing is, on one hand, they're putting this massive stimulus package in. On the other hand, they're going to raise the rates. They have to raise the rates to catch up to what the bond market is doing. The Japanese so-called Federal Reserve cannot control the long end of the curve. So if they do raise the rates, is to protect the yen, because what's happening now is the US dollar is gaining strength against the yen, and once you start putting the stimulus package in, it's literally basically, in one hand they're going to raise rates, on the other hand they're going to introduce this 130 billion stimulus package, which is very inflationary. Well, the bond market is sensing that. The bond market is also sensing that the GDP of 200+% is not a livable situation. So it's an interesting thing. So how does that connect to the carry trade? Well, as we know, carry trade was free money, basically. You go borrow in Japan at zero interest rates, and you come invest around the globe at 4, 5, 6, 10% in stocks or bonds or whatever. Well, that ended now. So even if the unwind of the carry trade does not happen like it happened last August, that was because the Japanese yen was gaining strength against the US dollar. And that's why the forced unwinds happened, and that's why the market tanked. Well, now I don't think that's going to happen, but what has happened is that's why I think crypto is also selling off or sold off, is that ample liquidity that was getting sloshed around the globe is not there anymore. So when liquidity leaves the system, what happens? Well, things don't go up parabolic. Things don't, although indexes are still grinding up. There's a relationship between what the Japanese rates are doing with what we're doing in this country. So coincidentally, and I think this is all coordinated anyway, coincidentally, as Jay Powell, the Federal Reserve Chairman, said, QT is ending in the US just in time, because the faucet has been turned off in Japan. You have to go borrow at 3%, 3.5% on the 30-year end, on the 10-year end at 2%. Well, you can't turn around and invest that money and then gain the spread, right? So the liquidity is getting sucked out of the system. If not sucked out of the system, it has ended. That game has ended. So putting on a carry trade now is a lot more risky than it was when Japan had zero interest rates for 15 years due to their deflationary cycle. So yeah, there's a lot to think about here. But so when liquidity is not drained, but the liquidity is not there anymore, where a hedge fund can go put on a carry trade with 10x leverage and take that money, invest, and make the difference, well, what are we going to do? Well, just in time, QT has ended in the US. Now, is that going to be QE, quantitative easing? Well, the administration would like that, and that's the second, topic of conversation we should have. President Trump announced the next, I don't know if it was formally announced, but I think he announced the next federal chairman yesterday at the White House. I don't know if it was official. I didn't follow it that much, but we know who it is going to be now. Well, if you all thought Federal Reserve was an independent body in charge of regulating interest rates, right? So Federal Reserve is like the gas pedal and the brake pedal of the economy. When the economy gets hot, what do? They raise rates, but I don't think they've done a good job over the last few Federal Reserves because they were always behind the curve, as we call it. And they didn't raise rates fast enough coming out of the pandemic, and that's why we had the inflation genie, come out of the box, and now we can't put it back in, and inflation numbers are running hotter and hotter, or at least they're not going back to the Fed mandate, which was 2% inflation with full employment. Well, unemployment numbers are ticking up. Inflation is not 2%, but then now they're just kind of going, okay, well, maybe we can live with 2.5%. Well, folks, inflation is not 2.5%. Inflation is running a lot harder than that. That's what the government's telling you. And I've been saying this for years now in private circles, and the last year on this YouTube channel, is that you're losing buying power on your dollars by 5, 6, 7% a year, some years more. Just look at a dollar index chart. This year, against a basket of currencies, the US dollar has lost about 9 to 10%. Well, you're losing 9 to 10% of your buying power. And that's why I always recommend invest. You have to invest. If you don't invest, you're going to lose 9, 10% of your buying power every single year, because I don't think anybody's W-2 income or job income is going up by 6, 7, 8, 9, 10% a year. So going back to the Federal Reserve, and if you thought they were an independent body, which they say they are, but now I think the White House and the Federal Reserve are going to be just one. I don't think Fed is going to be independent. So you have a hand-picked Federal Reserve chairman coming in May, since Powell is leaving. You have all these governor changes, right? So basically, White House can write any ticket that they want. What could happen with interest rates? But again, what the White House, I think, is missing is that our inflation is not under control. If we start the printing machines again, go to full QE, because you have to understand, I mean, this Japanese carry trade dollars are into trillions. There's a lot of money sloshing around with that. Well, that ended, so now timing is perfect, it looks like. White House is going to be in charge of the Fed. Midterm elections coming up next November. Just in time, they control the Fed. They open the faucets again, and then they start the printing machines again, and then they start pumping. While they start pumping, then what happens to our fiscal numbers, right? The debt keeps going higher, obviously. Inflation could get hotter, and gold is seeing this. And gold is back to all-time highs, and silver is going crazy. I would have thought crypto would have done a little bit better, as opposed to selling off by 40% on Ethereum and about 35%, although they have bounced from the lows of last week. And in a macro environment like we have, where the Federal Reserve is and the White House is one, And now he's going to pick up the phone and call the Fed chairman and say cut rates. Well, one thing that the Fed is not able to do, and most people know this in the finance circles, is that Fed cannot control the long end of the bond market, just like Japanese Federal Reserve or Japanese central bank cannot control the long end. They can always do it on the short end. Like Fed can lower the Fed funds rate all they want. Like we just had an interest rate cut in the middle of December. You know, the odds are now that we're going to get another 25 basis point cut. So far, the Fed, starting last September, has lowered the interest rates by, I think, if we count the December, by 100 basis points or 125 basis points. What has happened to the long end in the U.S.? It hasn't come down. In fact, it has gone up a little bit. So the Japanese central bank is experiencing the same thing. You know, they want to control rates, obviously, on the long end, but they're not able to, because that market is so much larger that it has its own mind. It's not going to listen to what the Fed is doing in the U.S. or what the Japanese central bank is doing. And just like what we're doing here, if the Fed can just cut the federal fund rate, you know, if the long end doesn't come down, every auto loan, every mortgage is on the 10-year and 20-year note, 10-year note and 20-year bond in the U.S. So are the rates truly going to come down? But what I feel like is going to happen is that now that the White House has full control over the Federal Reserve, they could start QE. Well, if they start QE, we're off to the races. You cannot be bearish. You cannot fight the Fed. And so this period of, although indexes are only 1% from ATH, all-time highs, a lot of stuff under the surface is getting crushed. So that's what I'm seeing. I think, you know, all bets are off. Probably we may have maybe a little tough quarter coming up in the New Year's, but I think after that, once QE fully kicks in, we're off to the races again. I mean, look, you guys have to understand this. That's why I keep saying one has to invest long-term, short-term. Forget the trading part. You have to invest. So how much is the S&P 500 up this year? 14, 15%. Well, the dollar has lost 10% of its value this year. So if you deduct that from that, you're up 5. Okay, at least you're gaining something. You're fighting inflation, or you're fighting loss of buying power. So you have to invest. If you don't invest, you're going to be left behind, and because your W-2 is not going to keep pace with anything that you're experiencing out there. So there is a lot of cross currents going on, macro, between what's happening in Japan, what's happening in the US, the timing of QT ending. At the same time, JGB rates skyrocketing. Japanese government just about to start pumping $130 billion worth of stimulus, but they have the generational problem. Their birth rates are against it. Actually, the people are not, and I don't know if they're going to open the borders and do what the Europeans are doing. Have a newer immigration policy, let's say, and import some younger folks. But then look where Europe is at with that. So there's a lot going on. I do think it's fun to think about it. For me, anyway. For you, it's probably boring. But for me, it's fun to think about these things and then read the tea leaves. Again, you cannot swing trade. You cannot day trade. You cannot position trade with all this. But you have to understand, if a sell-off does come, why is it happening? And then you'll hear it from the clowns on CNBC saying, oh, carry trade. Well, then people ask me, what is the carry trade? Well, I've been talking about the carry trade for 6 months. I don't think it's going to be the same thing as last August. I think it's going to be ending the carry trade, meaning not unwind the carry trade, but the carry trade has ended. You can't do it anymore. So, we'll see. We'll see what's going to happen. Good morning, everyone. So welcome to Trading with Sergio Wednesday edition. The schedule is every Monday and Wednesday, Trading with Sergio. Every Friday, Power Hour, where we end the week. I always show my positions, and I'll post my positions again on the community page of the YouTube channel. If you're not subscribed, please subscribe and put a thumbs up. Supposedly helps the algorithm, according to my YouTube manager. And my website is really doing well. So please, I'm trying to help me in this new challenge. I'm trying to help financial. I'm going to get financial literacy going in this country because I think it's in the toilet. And if you can help me and pass the website around, www.sergioavedian.com, and there is a free newsletter that comes with it. It's absolutely free. I don't have Discord. I don't have any of that. I'm not selling anything. Just go start educating yourself because finance could be complicated, and then I'm trying to make it as easy as possible. Investing could be complicated, and for some of you who know me from some other channel on YouTube, much larger channel, I'm trying to make financial literacy a priority in this country because I think we don't have it from elementary school all the way to college. And even adults who are in business world, they don't understand finance and they don't understand investing and how important it is. You know, the power of compounding, rule of 72, and drip systems and ETFs and dollar cost averaging, even simple things like that. People just don't understand. And I'm going to do my best. So please help me with that project that I have going. And please go subscribe to the free newsletter. It comes out every Monday, 12 Pacific. It'll drop in your inbox. It's not long. It's about 4 or 5 minute read, but it's really, really important that, it'll start, maybe hopefully it'll start some young folks investing journey because it's a must. It's a must. It's a must. So, good morning, Doug. Yeah, from the other channel, like it was a disaster yesterday. We do a weekly live stream there, and a lot of people saying, Serge, you're like on a cell phone. I'm like, bro, I'm not on a cell phone. I'm doing the same thing. YouTube somehow, I think it's a good thing that people can watch on their cell phones. But so when you click on the icon, there's 2 live stream icons now. If you guys notice that. And one is the vertical, one is the horizontal. If you click on the vertical, you can always switch to the other one is going to be horizontal. But YouTube, I think, should some sort of a notification, or I could probably do it. But then, as you guys know, the title of the live streams gets cut off after maybe like a couple of words. And at the end of that, there is YouTube has put in a little cell phone icon, meaning that's the vertical stream, and then the other one is the horizontal. But I think we have to do a better job as creators to explain that to the people who are watching, because out of the blue, they click on the vertical one and they don't like it. Look, some people like it, some people don't. I don't know. But, so going forward, before the live streams, I'm going to explain that. Broad Capital, good morning. Personally, thoughts of the possibility of a Fed that's not independent scares the shit out of me. I'll say it. Yeah, I mean, a lot of people don't like it. I don't like it either. I don't know if it scares the shit out of me. Independent or not, what has the Fed done? We have a broken fiscal policy and a broken monetary policy in this country because the monetary policy follows the broken fiscal policy. Look, we like printing and spending the money we don't have. I mean, simply put, what else is there to do? And has it been different? With Democratic administrations, Republicans, it's the same. I mean, national debt has gone up under Republicans more than it has gone up with Democrats, but equally well. So they all look. Washington likes spending the money they don't have. They collect. Look, the Treasury collects $5 trillion, basically, from income taxes, capital gains taxes, and corporate taxes, and things like that. Well, they spend $7.5 trillion. What else is there to do? It doesn't matter who's in the White House, who's in charge. I'm old enough to remember, right? We had the balanced budget amendment and things like that in the past. Well, at the moment, actually, if they do go fiscally responsible, I think the markets will crash, honestly. Because markets are depending on so much money just getting pumped in. That's why we just keep going higher, because I've done videos multiple times about this. The money supply growth, M2 growth in the US and globally, It's gone from lower left to the upper right, almost parabolic now. And assets follow that. Look at real estate, look at gold, look at crypto, look at stocks. Assets follow where the money supply is going. Some with a little bit of a delay, some basically one for one. But if we do end the music now, there's not enough chairs in the room. Seriously, I think we will crash. And we will be like the biggest crash that our generation has seen. The GFC will look like nothing next to it. But we can't stop the music now. I feel like we're just stuck. We can't stop the music now. We just keep the ball rolling, kick the can down the road. That's my feeling anyway. The funk is back. I'm pretty scared. Yeah. Yeah. Well, I put 2-part video on volatility drag and bunch on MNAV. I hope you understand now. I don't know what to tell you, man. I don't know if he's here or not, but I took on a student who has the same problem as you. You're at 16.5, I think is manageable. He's at 30. And I'm going like, I don't know what you guys are doing. I mean, well, now you understand. Now you understand what kind of pickle you're in. I mean, I don't know if you have the money to get assigned or roll, but then even if you roll, I don't know how much you need to now kick the can down the road another 6 months to roll, maybe hopefully with credits. I doubt it. You're in a pickle. You can't let a position like this. Okay, so this is the problem. I actually invited someone to show up and come talk to me about this, and hopefully he'll show up. Because a lot of these furus on X, they talk about, oh, I love selling puts, I love selling calls, I love la 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 la, and I'm going like, you guys are full of shit. Selling puts, selling calls in a volatile market will take you to the broke house. You'll be broke as broke because you will get whipsawed, especially selling puts, selling calls on high beta stocks. You will get whipsawed. You will roll the puts down, roll the calls down, and the stock will shoot up. And then your calls will be in trouble. It's not advised. Selling calls on 2x ETFs with volatility drag and MNAV issues, which the underlying has MNAV issues, and then the 2x ETF is volatility drag, as they call it, which I did 2-part video about, talking about 2x, 3x ETFs, how they will take you to the poorhouse if you buy and hold them for long periods of time. Nobody talks about these things. Maybe it's me. Maybe I'm the dumb one in the room. Maybe everybody's so smart, And then when I do push back on X, which is kind of entertaining for me, they all go like, oh, you're an idiot. I'm like, and once we get there, then I just go leave the conversation. Might as well. So there was a gentleman yesterday, because I called selling, especially selling calls, picking up pennies in front of a bulldozer. Because how many people have sold calls on NVIDIA? How many people have sold calls on Palantir? How many people have sold calls on SoFi? How many, all these stocks that are just going crazy, hood, right? And then their calls are $20 in the money. They don't want to lose the stock. Now I got to price. Look, if you have such commitment on a stock, just buy and hold the damn thing. That's my point. I do sell cover calls, but I dare sell cover calls on 3, 4, 5 beta stocks. It's so volatile. It's moving up and down so much that whatever you took in is going to be a joke. Now, unless you're working for, 3% a month, 2% a month. Okay, fine. Then you can do your little wheel strategies or whatever. But look, man, if you have commitment, hold the stock. Why are you selling cover calls? Because look, all the studies, and these are facts on structured products. Go look at. You guys want to do the poster child of structured product? MSTY, weekly dividends. Oh, wonderful, amazing, because that's what they do, is sell cover calls. Or MSTW. It's not going to save you, especially in volatile stocks. It's just not going to save you. Well, hopefully, I don't know what to tell you, bro. Yeah, it is a dangerous cocktail. But don't you believe that that's what's going to happen with a hand-picked Fed chair and hand-picked governors? They're going to turn on the faucets because look, Trump cannot afford to lose the midterm elections. The highest unemployment rate in the country is with the recently college graduated cohort. It's about 25%. They can't get jobs, and this is without AI kicking in fully. So, you know what happened in New York. You know what we did. We have an interesting socialism experiment going on there. So, look, man, voters are fickle. They'll just go this, and then they'll go this. So if they don't turn the printing machines on and save that midterm elections, then you have a dead duck president or sitting duck or whatever they call it. Yeah, and then the market will definitely sell off for sure. But market wants liquidity, so liquidity is cut off now from Japan. And now we're stopping QT. Are we going to go full QE, which we probably have to at some point? I mean, all the indicators in the economy, auto loan defaults, credit card defaults, BNPL is going through the roof. I mean, look, you don't have to believe me. Go to Federal Reserve Economic Data. It's all there, if you do believe the data. So, I don't know. I don't think economy is as healthy as the government says they are. Gemini says that after January, big moves aren't made. BMNU will drag and die. Okay, Gemini, no. Okay. You're still confusing all this. The volatility drag will kill you ultimately. Look, you don't have to listen to me. Go to their website. Read the disclaimers. You cannot buy and hold 2x, 3x ETFs. Just can't. Even if, and please, folks, just go check out today's video. In fact, I was supposed to release at 12 p.m., but I think it was a mistake. It released at midnight last night, whatever. So it'll get less views. However, go watch that 7-minute video, 7 minutes of your time. Basically, all I did is I took the two poster children that people talk about 2x, 3x ETFs. One was on Tesla and TSLL, and the other one was MSTR and MSTU. In fact, MSTU had a 10-for-1 reverse split because it was down under $1. Please go check out that video. It's pretty clear. I cannot be any clearer than that. It's with charts, with dates, with prices of Tesla versus TSLL, MSTR versus MSTU. Same thing is going to happen BMNR and BMNU. These are wonderful tools if you're going to catch a leg up or leg down. You can short these 2x ETFs on BMNR. And BMNR is not going to move by itself. BMNR is dependent on Ethereum price. We all know that. Hopefully we know that by now. Because these ex-furus, all they do is draw lines, chopsticks on their BMNR. I go like, you're an idiot. BMNR is not going to move by itself. In fact, BMNR may even go lower because MNAV is getting, crushed or shrinking. Look what happened to MSTR with MNAV. MNAV under 1 now. It started at 2.2 when the stock was $550 a share. So MNAV on actually BMNR is also shrinking. It's down to 1.1, 1.15 from 1.7. So what is Wall Street doing? They're buying Ethereum and shorting BMNR. They did the same. They're doing the same things. They're still doing it with MSTR. They're buying Ethereum and shorting MSTR. MSTR situation is a little bit more hairy than BMNR because BMNR doesn't have debt. But BMNU is going to follow BMNR. But if BMNR goes sideways for 6 months, BMNU will be lower. Volatility drag is going to kill it. Look, this is pretty simple with the 2x, 3x ETF. So let's do the math. If you have a 2x ETF at $10 and the underlying is $10, okay? It's hypothetical. Underlying goes up 10%. So it goes from 10 to 11. Cool? Okay. So the 2x ETF should go from 10 to 12. Done? Cool. The next day, just the next day, the underlying goes down 10%. So that's 11 minus 10%. That's $1.10. right? So that means now the underlying is 990. It's a simple math, folks. The other one, the TOEX ETF, went from 10 to 12. Now that has to go down 20%. Cool? Cool. 12 of 20% of 12 is 240. Now that thing is going to go from 12 to 960. Oh, look, the underlying is 990. 2x ETF is 960. Now do this every single time it goes up and down. Now you guys understand the drag? The slippage? People don't understand that. Now, these are wonderful tools to trade if you catch a leg for 10 days, maybe a month max. It happened with all these AI power generators, Oklo, for example. Stock go from 20 to 200, and its 2x ETF went from like 80 to 400. Amazing. It has happened with Google, right? And look, it happens positively as well. But holding these things over long periods of time is going to take you to the poorhouse, for sure. I don't know about Gemini, listening to Gemini too much. BMNU will drag and die? I don't think so. If ETH goes to 4,000, BMNR will go to 50 or 55, and BMNU will be 15 probably. But it will basically, it will not go up as much as it should, and it will go down as much as it did. So the math I gave you guys is pretty simple. 10% up one day, 10% down the next day. Simple math. 10 to 11, 11 to 990. On the underlying, 10 to 12, 12 to 960. One is 990, one is 960. We both started at 10. That 30 cents difference is the drag. You have to understand that. If you don't understand that, then I don't know. Just buy and hold them and walk them down to 1, to 0, whatever. BMNR has hit 38 for 10 BMNU, and 49 BMNR would be around 15 BMNU. No, I don't know about the drag on that one is because it depends on Ethereum, man. BMNR is not going to do any of this by itself. In order for BMNR to go from 38 to 49, Ethereum has to be probably 4,000, 4,200. But BMNR is not going to go by itself from 38 to 49. It's not going to. Yeah, my email, Sergio@sergioavadian.com. I'm telling you, I just took on I do coaching on, obviously, personal coaching, and I just took on a student and trying to clean it up. He's stuck with $30 puts. I'm like, how do we clean this shit up? Almost impossibility. Yeah, Doug. See what I mean, Doug? It is. It is, but why? Okay, but why even look? The rule of thumb, there's a rule of thumb in all of this. Selling puts, selling calls. Everybody goes, oh, it's wonderful on X. Selling puts, selling calls. Look at all this money I'm making. Nobody talks about the other side of the coin, the risk of selling puts, selling calls. Why don't they? All they post is, oh, look how much money I made. My short calls are printing. There you go. Like, what is happening to the underlying if your short calls are printing? It's tanking. Because the calls you sold for a few pennies is not going to give you the protection. For example, IREN. Okay, stock was 80, now cut to half and 40. You could have sold all the calls you want. How much protection is that going to give you? Not much. Then when I push a little bit, they go, oh, you're an idiot. You don't understand. I'm like, bro, I've traded more options than you're alive on this planet. So all I'm saying is buyer beware. The rule of thumb is if you took in $5, for example, on BMNU, when you sold those juicy premiums and you thought, oh, it's so juicy. I'm like, okay. The rule of thumb is if you just sold puts, when the stock gets to 10, you have to roll. If you sell a strangle, whatever combined premium you take in, And if the put or the call is challenged, you have to roll at that point. You don't wait until it goes from 15 to 4 or 5 that it went to, and then think, okay, I'm in trouble now. And now hope and pray that the market comes back and saves your ass. Because you're at the hope and pray stage. Hope and pray stage. Happened to me with hymns, but unfortunately I was difficult to take assignment and turn around and sell short. Yeah. But now you're like a long-term investor. Who's this musty clown? Obviously a dust jester who's been marinating in their own nonsense way too long. Okay. And then you have idiots like this. I don't push people off, but you have idiots like this. In fact, R86761, let me post the link. And then if you want to come discuss this, we could. Civilly, of course. But then it doesn't seem like you're a civil person. See what I mean? This is the internet. There's a keyboard warrior right there. There's the link. There's the link. Clown. I don't know. One of us is definitely the clown. If ETH hit 4,200 later in Q2, would BMNU hit 15? Well, the faster the better for you. There certainly will be drag going all the way to February. But figure it out, right? Okay. So the faster it happens, the better. But let's do that. ETH is what? 3,100? Right? Okay. Let's say, I don't know, end of January goes to 4,200. Sooner the better, obviously. That's what? 30%-ish, 33%. So that means BMNU should go up 66% ish. So $8, 66%. Yeah, that'll get you to, hopefully that'll get you to 15. And hopefully in the meantime, maybe you can sell some calls if you do get assigned, if you have the money to take the shares, right? And start selling some calls a couple of times, couple of cycles, because they're monthly. Unfortunately, they don't have weekly calls. So that's basically what you can do. But your problem is, again, what if it doesn't? What if it goes to 3,700 and stays there for a while? Right? That's when the drag is going to kill you. So it's not an easy situation to get out of, man. It's not. I feel for you, but that's all you can do. What can you do? I mean, if you have the money, you take the shares or you roll. If you do roll, I mean, look, just simply turn on your option chain and figure it out. Where can you roll to? How much can you kick the can down the road? And where can you do it with hopefully even? And when you do roll, my suggestion would be, create a strangle. I mean, sell calls as well. Because both sides cannot get into trouble, right? And then if your call side starts getting, threatened, then you can buy the underlying, you can buy some, calls, turn them into call credit spreads. You can do all kinds of things. But at the moment, just holding and waiting is just going to mentally and every which way is going to be a drag, for lack of a better word. So, yeah, we'll see. I don't know. Good morning, traveler. Anyway, so give me a minute because I think there's someone at the door, which I think it's a package. So give me a minute. Let me go get that, and I'll be right back. RH6761. If you're still around, grab the link and come on. We would love to discuss this subject with you. All right. Uh, okay, you can't hog the chat now. I rolled 50 contracts even and assigned 15,000 shares. I mean, I can't answer individual questions. I don't know how big your account is. I don't give advice. None of this is trading, financial, or investment advice, by the way. So the link is up there. Last call for R86761. Okay, I have two suggestions for you before I put you in YouTube heaven. Leave your mother's basement and you keep selling puts and calls on the first 10% correction, your account will be blown. I'm not wishing that on you, but you will do it. So with that said, you just went to YouTube heaven or YouTube purgatory. All right. So what else we're gonna do? We're going to go to our positions real quick and see what's going on in this world of finance. S&P index is just kind of, chugging along. I'll go to that in a minute, but let's go to the positions real quick. Same positions, I added one. ASST, same position, 101, 102. There is an influencer called Mike Alfred on X. There's like 1.5 billion shares outstanding here, and then the guy goes, I bought 2 million shares, and then people go jump on it because Mike Alfred bought it. Now, I'm sure he's a perfectly fine gentleman. But if you're gonna follow an influencer without you doing your own due diligence and buy stuff like this, buyer beware. So I am long 400 leaps, 2.5 January 27 leaps, and 300 of the 5 leaps. I paid pennies for it, so I'm okay with it. But I'm questioning the sanity of it. So BMNU, I'm in the same boat as you, whoever you are. Cost basis is wrong for the fact that TOS does not adjust for some reason for the puts. Actually, all this started with selling naked strangles. I got assigned 10 minus 230, 9 minus 140, 8 minus 120, and 7 minus 75 cents. Well, it shows cost basis of 891 for 3,500 shares, which it shouldn't, but it does. Okay, so my pure cost actually is 778. Stock is 790. Now I want to add to it. So immediately, of course, what I did is I went and sold. See, I do sell cover calls on things. I sold cover calls. I sold 8s expiring in 2 weeks, December 19th at 120. I sold the 9s at 95 cents, and I sold the 10s at 70 cents. So now that, and then I sold the 11s at 54 cents. So that covers the 3,500 shares. Then last few days, I started adding on that sell-off. Actually, I added more naked strangles. So I sold 5 11s for $1.05. I sold 6 11s for $1.40. And yesterday I sold some more 6 12s now for $1.20 and 5 12s for 88 cents. So what am I trying to do? If the stock is, if BMNU is under 6, I will get assigned more at 4 and change. And if it's below 5, I will get assigned more at 415 and change. So that will lower my cost basis, and then I'll accumulate shares that way. Not only lower but the calls will expire worthless as well, because both sides can't be happening at the same time, obviously. So that means I will collect all the premium that I sold for $1, for the 8s, 9s, and 10s, and then we'll wash, rinse, repeat with different strikes for next month, hopefully. I am long 5,000 shares of Blaze AI, BZAI. It's getting kind of crushed a little bit. Cost base is 243, stock is 220. This is the new position. I started, one of my chat group members is big on it, was big on it. He took a nice ride from 3 to 8. Now I'm joining him. I bought some January. This is a directional spec bounce play, kind of a play. I bought 150 of the January 5 calls. It's a pure spec play, really. It's a directional play. I will buy probably 50 more. Stock has sold off from 8 to now it's 475. It's into support now. We'll see. We're gonna bounce back to maybe 5.5, 575. Double. Get the heck out of Dodge. We'll see how it turns out. And the Sharpling Gaming, same position. I'm long. January 15 calls. Again, directional bet. But then I've been selling weekly. Luckily this has weeklies. I've been selling weekly 15 calls against the January. So every week collecting premium and avoiding data decay. Basically, that's what's going on. But still 65, 75%, somewhere in that range, cash. Bullets are dry, waiting for some things to come to me. As far as the indexes, we can look at some there. Let's see what's happening with Ethereum. Tesla having a big old day today. Big old up day. Yeah, up 17. It's retesting the high probably now. But see, this is the video that I put out today, by the way, talks about Tesla and TSLL. So Tesla's up 4% today, 4.07%. How much is TSLL up? Should be up 8+%. Yeah, it's up 8%. But Tesla is basically from a year ago. Tesla is only down. Let's see. Tesla is basically retesting the old high of 480 range, 440, 450. So Tesla is down about 5%, 4% from where it was a year ago. And TSLL is down 50% because it was like 40, now it's 20. So how'd that work out? If you bought and held both, one you'd be down 5%, the other one you'd be down 50%. That is exactly why you don't buy and hold 2x ETFs. Although for a week or so, yeah, you may do so for maybe a couple of weeks. But after that, once the move is coming to an end, be very careful with that stuff. That's all I'm going to say. But so we'll just wait for December expiration, and then we'll see where it goes. Yeah. Yep. Anyhow. Hey, I mean, I don't know. All I know is beware. Buyer beware. Know the risks. There is always the other side of the coin. Because I feel like a lot of people are getting sucked into things that they don't belong in. And that's because they haven't understood or they haven't educated themselves. They just listen to some furu on X or YouTube or whatever. And they go, oh, yeah, he said it. It must be good. Or they go join some Discord. I don't know. I don't know. But I mean, if you don't do your own due diligence, don't blame others. Michael Anthony. DLO, that has great fundamentals. What do I think? Okay, we can take a look at it if you like. Let's take a look. DLO. Technicals and fundamentals come together. It works. D Local Limited. I have no idea what they do. Obviously, last two earnings, last cycle, actually 3 cycles in a row now. 1, 2, the third one, this earnings report was okay. Sell on the news. The stock started actually behaving really nicely on the earnings report that came out May 14th, and then it really popped on the next earnings report on 8/14, 8/13. So earnings are out of the way. Chart looks decent. I don't know what the company does fundamentally, but chart looks okay. Technically, we're in support at 200 EMA. If you like chopsticks, 3-year, same thing. It's all right, you know. I don't know. I mean, it looks okay. It's into support. If you're going to buy it, this is where you need to buy it, right about 12 range. And I mean, it's a low risk trade here. I'm not sure if this is a buy and hold generational kind of a situation. I don't know the company, so that's all I can say. But technically, it looks okay. And it looks like now Ethereum is selling off. That's the Ethereum ETF, iShares. Yeah, it's kind of, yeah. You can tell immediately what happens to BMNU and BMNR. Yeah, they just immediately start selling off because it follows Ethereum, man. That's what people I just don't understand. They just talk about BMNR, BMNR, BMNR. BMNR is going to follow Ethereum. If Ethereum goes down, BMNR is going to go down, and so will BMNU. That's why you put the trades on, understanding all this, you know the risk. I fully understand the risk. That's why I do the naked strangles, keep collecting premium. Drag is not going to hurt me that much because I'm not going to be in this thing for too long. But even with the drag, I'm reducing drag by doing the strangles, naked strangles. So I don't mind buying more shares at 480, and I don't mind buying more shares at 430 if it's below 5 December 19th. And I also don't mind selling at 8, 9, and 10 if it's above those strikes while the puts are expiring. So I'm basically avoiding drag by doing all these different strategies. If you don't do it, if you're just stuck, and if you just sold puts and you're just watching it, you're in trouble. That's all I can say. I mean, yeah. So I looked at that. Any other questions? No questions? Okay. Well, we'll go have a cup of coffee. So thank you for joining today. I will be back on Friday with Power Hour. And please go check the video out today about 2x ETFs, how they will take you to the poorhouse, or 3x ETFs. And God forbid now 5x ETFs are coming around, folks. Yip-de-doo, 5x ETF. What's up, Doug? Hope you're feeling better. Does the possibility of AFRM, SoFi, and Toast being included in this environment? No. I mean, they do, they do get the pump, obviously, because all the S&P 500 ETFs have to buy it. They get the pump. But then the curse of that is once they're part of the S&P 500, when S&P 500 sells, I mean, they lose their fire basically, because until they put them in the S&P 500, they can kind of move or beat the S&P 500, but now they're just kind of going to move with it. So when S&P 500 sells, they're all going to sell because they're part of the group and they're going to get sold off. So yeah, for a short period, the pump is important, like they did with Hood, right? They kept pumping it, and every time they didn't put it in the S&P 500, it sold off, and until they put them in the S&P 500. So, not really. It's just like we were talking in our group chat, by the way. We talked about group chat about splits, right? When they announce something and somebody announces a split, stock shoots up 10%, and I'm going like, it's the most stupidest thing I've ever heard in my life. And then look at that was Netflix actually. We were talking about it. Look at Netflix now making a lower low. I mean, look, man, there are people out there who have beliefs because they haven't seen a bear market. They haven't seen it. They haven't even seen a decent correction actually last 2-3 years. I mean, they have seen a couple of whooshes, but then V bottoms happen and market came back and saved their asses. And they always think this is always going to be like that. It's not going to be always like that. But then, then there are the idiots like that who just kind of go, okay, cool. GOF is a fund that pays a monthly dividend. I don't know anything about the fund, and that's a structured product, and I don't like any of those structured products. None. Not for me. It may be for you. There are ones that shall give you, give you weekly dividends. Again, the poster child of that is MSTY and MSTW. Go look at them. Weekly dividends. And then what happens is that the lower the stock goes, the less the dividends become, because the premiums are not there on the calls that they're selling. I don't like any of the only people that make really good money on structured products are the people who are running the structured product, because their management fees are a hell of a juicy. I don't know who Eric is, bro. Well, that's a long name. The Wheel Deal Trading Journal. Did Eric join me? No, I don't know who Eric is, but I put the link up. If he doesn't want to join, he can join. I saw you guys going back and forth. No, we didn't go back and forth. It was like 2 comments from me, 2 comments from him, and I said, "Come on, and we can talk about it." And then maybe it was the other idiot who I put in the YouTube purgatory, YouTube jail. So, look, I'm open to discuss, and I'm open to discuss anything. I mean, look, I have cover calls on BMNU, but I don't like cover calls in general, because they stop you from, taking the potential out of a company that you believe in. If you really do believe in the company, if you're committed, and if you want to go for 1 year, 1 day, and go long-term, capital gains rates and things like that, why would I sell calls? I mean, yes, you're going to roll, so much energy goes into it. Just let the stock go. If it's going to go up, it's going to go up. But to me, it's like, all I'm saying is, cover calls have a place. But when the market's volatile, and when you're selling cover calls on stocks that have 3, 4, 5 beta, they're not going to give you any protection. And then because they're 3, 4, 5 beta, the bounce is going to be so hard that then you're automatically going to be in the money. And then now you're going to go, oh shit, I don't want to lose the stock. Now what do I do? It's just too much work. Too much work for the money you're taking in. That's all I'm saying. Short term, maybe, a weekly cover call, low delta, grab a few pennies, every penny you lower the cost basis. Great. I don't know. I mean, the repair strategies, right? If you're really deep in the hole, you bought something and it tanked on you, you're going to sell cover calls next 2 years to just lower your cost basis. I just don't like getting behind and then fighting for my money. So I just go, okay, if it goes down 6, 7, 8%, I'll just cut the loss and get the heck out. As opposed to go down 30% and then fight for it. It's just too much work for me. At this stage of my life and career, I don't want to do it. I never did it anyway, so nothing new for me. But I'm not talking shit to the people who sell puts and calls. What I would like is, I would like them to explain the risks. Because none of them explain the risks. They go like, oh, look at me, how much premium I collected. I'm like, okay, and? Right? How much premium you collected is inconsequential if a stock goes down 30%. Right? So to me, it's like, let's talk about the risks. Because most people today are not talking about risk. All they're doing is just posting their account balances. I'm like, okay, great, cool, awesome. But a good trader always thinks of the risk. A good trader, when they put on a position on, they think of the exit. Like, what could happen? As opposed to have this fake belief that, yeah, it will go up and I'll be fine. You can't live like that. I mean, you lose sleep, you get anxiety. And to me, it's like, what is your exit? Could it happen? And nobody wants to lose money, but could it happen? Could you sell a put on a stock that goes down 30% overnight, 20%? And it has very many examples. Let's go with the big names, Meta and Oracle and all these things. Where are you now, right? Again, I'm not saying it's a bad idea, but what I'm saying is, I wish the people who do this on X, on YouTube, talk about the risks. And nobody talks about the risks. And what happens is that some people who are not educated, they don't understand the Greeks, they don't understand anything. Because they're so comfortable doing this because some other guy is doing it, who may have a much larger account than they do. I'm just trying to avoid pitfalls of selling puts and calls. I'm not against it. I do it all the time. But at least people should talk about risks. There is risk in everything. There is no risk-free formula on Wall Street, you know? And I like talking more about the risk and what can happen because I've made the mistakes. I want to stop you from making the same mistake. I think it's honorable thing to do, as opposed to calling some clowns and this. I don't do any of that stuff. I'm not a child. I'm open to discuss civilly and debate that selling cover calls is, I call it, and then maybe some people get offended, is picking up pennies in front of a bulldozer, especially in high beta stocks, because it will run from you. Once it runs from you, now what? Right? Now you start the rolling process. Why? Why so much work? You trusted the company, right? You own the shares. Unless you're doing it like really short term, collecting 2-3%, 4% a month or something, which is great. If you can do it, great. But I just want people to talk about the risk, that what happens if we don't get a bounce on a stock that you hold that broke? What if we don't? What if? There's always this what if. You have to think of what if. Because if you don't think of the what if, that means you don't understand the risk. That means it's just longer periods of time. You're just going to get washed out. So my point in all of this is, I think of the exit and I think of the other side. I want to make money like everybody else, but I have my plan ready. If this happens, it's like, if this and this happens, this must be taking place. This is what I have to do. And I do it. I don't fall in love with stocks. I don't, I have an investment account for that. I'll buy and hold there. Trading is different than investing. A lot of people start as traders and then they become long-term investors. But I've met hundreds of those people. So I don't want to do that, right? And I don't want to put out information saying that it's glorious selling puts and calls. It's not. Once you get stuck in a few and it takes you a year or two to get out of it, then you'll understand it. Like, maybe it's not what they said. But I'm just saying, I'm willing to understand and discuss all this. Did you say you like the yellow chart? Yeah, the yellow chart is kind of neutral to bullish. I mean, considering it's not a major name, a lot of stocks are selling off. It looks like earnings were good 2 quarters in a row. Maybe they're on a run fundamentally. Fundamentals, I don't know. I don't know what the company does at all. The volume, no, I mean, chart's neutral to bullish. It's not great. It's not making 52-week highs. For you, sir, Michael Anthony K5R, why don't you create yourself a 52-week high list? All those stocks, technically and fundamentally, obviously, they're making 52-week highs. That's very easy to do. You can do it on Robinhood or any broker that you're working at. Create a 52-week high list. It'll give you all where the money is rotating to. I have a 52-week high list, and then I pay attention to it for sure. I think it's the best thing people can do, because even in a bear market, there are stocks that are making 52-week highs. Money is always rotating. If you look at my 52-week high list, which has 4 filters, nothing complicated. It's a lot of bank stocks in there, a lot of biotech stocks, a lot of healthcare stocks. That's where the money is rotating to. At least you can also understand rotation, because money has to rotate. If it's coming out of AI stocks, it's coming out of IT, high-tech stocks, where's the money going? It's got to go somewhere. It doesn't go to money market. So just to understand rotation, I think I could recommend that highly for everyone to create a 52-week high list. If you're a Robinhood is great. Put your filters in, not too complicated. If a stock is making 52-week high, that means fundamentally, obviously, things are fine, and technically, things are fine. So that's what I would do. So I posted the link. Nobody came up. You guys are shy. Okay. Here's the link one last time. So what do we finish with? Yeah, buyer beware on the 2x, 3x ETFs. I don't know if any of you know if 5x ETFs have come out yet, but there is this massive appetite for leverage and leverage products. And if you guys thought the volatility drag was going to be a lot on the 2x 3x ones, imagine what it's going to be on the 5x ones. So those you need to maximum hold it maybe like a week or so, because after that it's sayonara. Don't do it. Yeah, they're just, I would highly recommend you guys go read the disclaimer on their own website. It clearly says this is not to buy and hold. A lot of people buy and hold. I'm like, why? If you want to buy and hold, just buy the underlying as opposed to the 2x. I understand it's exciting, and they do give you the pump, right? When the stock is moving for a week or two and they're going parabolic, if you're in a 2-3x ETF, hey, amazing. But know when to stop, as opposed to, just be married to it. Because selling options and things like that is not going to do it. I have health problems that I don't feel good most of the time. Then I have problems that I have appointment with. I don't know. What does that have to do with what I'm saying, bro? I'm not sure. I'm getting some weird fucking comments today. But anyway, I wish you better. I hope you feel better. That's all I can say on that one. Anyway, so I'm gonna go have a cup of coffee to finish my day. Other than that, please join the stream. It's always open. As long as civil. Look, I run a massive YouTube channel, and not this one, another one. We put people on, and they get out of shape a little bit, and then we put them in YouTube jail, and that's why those buttons are for the streamer. To me, it's like, opinions are opinions. I have strong opinions, and I'm open-minded. I'm willing to listen. I've been doing this for over 30 years. I do understand. This is not my first rodeo. I've been through many. And I just want the ex-Furu crowd and the YouTube crowd to talk about risks, because I want the new investor or trader to have longevity. Because by YOLOing, by whatever you do, you're not going to last. That's a fact, because markets will turn at some point. I'm not bearish. I'm actually bullish, because I think I'm going to be more bullish after March when the new Fed is in play. So money printing is going to go on. All the asset classes are going to go make new highs probably. I'm not bearish, but what I'm saying is that people should have some sort of understanding of risk, because risk is there. When index sold off 5%, okay, and all these folks' accounts go down 30%, and I'm like, yeah, because you're in 4 or 5 beta stocks, even if you saw cover calls, it's not going to help you. That's what I'm trying to explain. And then people think like, oh, this guy doesn't like cover calls. This guy, I'm like, no, I do all of it. I do it myself. But understand that when shit hits the fan, cover calls are not going to give you any protection. Yeah, they'll give you a little bit of protection. But then now you're so far out of the money that now you're hoping that you get a bottom and you just get a little pump and then you get out with your skin. Yeah, I just want people to talk about risk a little bit more, because risks are there. Anyway, so hats off. Much love. Stay healthy. Please come back on Friday. Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. And please go check that video out, the 2-part video. I put on Monday, part 2 went out today, last night actually by mistake. Talk about 2x, 3x ETFs and volatility drag and the swaps that they're into that nobody understands. Why the underlying will move and then you're still losing money on your 2x ETF after a year. Just understand what you're getting into. That's all I'm saying. So much love. See you guys on Friday, 10 a.m. Pacific, 1 p.m. Eastern for Power Hour.